Okay, today, Monday, March 18th. Imran, we are back on our Monday morning meeting calls. It's been a little hiatus here. How you doing?
Good, man. Thanks for all the facial hair. We've had a transplant, right?
We're swapping around. I was just saying my daughter was yelling at me, no more beard. So, she wins. But you don't have that problem. We got an exciting week coming up. We had the NVIDIA event tonight, and there's a whole bunch of stuff weighing on the chip sector here. We could dig into that, and then you got a cool, interesting trade here on CAT. And so let's talk about your kind of state of the union right now. S&P, we just got through options expiration. We have the, again, NVIDIA event tonight. Jensen is speaking at 4 o'clock Eastern time. So it's after the market closes. And my whole thing is, look, if they announce some incredible new product, then that's going to reinvigorate the chip sector, semi-sector, and kind of up we go. But that also plays into VIX expiration, which is a sneaky catalyst this week, and then FOMC, of course, on Wednesday. We saw equity consolidation last week, SMH down 3.5%. I see the call bids fading a little bit in markets, so we really need a shot in the arm. What's your sort of quick take on the landscape here?
Yeah, so it's interesting that rates vol hasn't really gone up for these BOJ and FOMC events. So rates vol's still very much on a local low. So the rates option traders don't seem to think there's much to these events this week. So I think that's interesting. Equity skew has had a little bit of a bounce last week. Started to see some offers on Friday, but in general was still higher. So I do think that we could have the events pass, and then that skew deflates a bit, and that fuels a bit of a bounce. So outside of NVIDIA, but the truth is NVIDIA is accounting for a lot of the moves these days, right? Like, it's just such a big name. It's on a 60 vol. It's implying a 10% whatever move on just today. So if NVIDIA moves 10%, then the whole chip sector is going to move, and then the whole market's going to move. So really, it does all depend on what happens on the NVIDIA event, and if they unveil something that hits market expectations or beats market expectations, then yes, we're going to fly. And if they don't, if they underwhelm, then the chips sector hasn't been trading that well the last week or so.
Yep.
So is it a case of, yes, we continue to go down, and the yield story, as 10-year yields are back at 435, does the yield story now matter, and does the NASDAQ correct down a bit because the chips aren't holding it up anymore?
Very well put. We're looking here at the SMH, which is the big semi ETF. You can see here two things. Number one, if I zoom in a little bit, there's a clear call skew here. The shaded cone is the 90th to 10th percentile range over the last 3 months, I believe, is what I have it set to right now. So normally you would see this in this zone here, right? But this is the event tonight that is really keeping that call skew in, keeping those vols high. And I'm 100% with you that if NVIDIA just kind of delivers a whatever, it could still be good. It just has to be very good to reinvigorate this bid. You can visualize the call skews via this chart I put together here. This is just week over week. So 2-3 weeks ago, I called it the eye of the hurricane, was at the top left of this chart, which is skew rank. So the higher we are, the more calls have a higher implied vol relative to puts on a 1-month basis. We had this very concentrated red blob about 2 weeks ago. Last week it faded, and then this is how we start this week, where you could see that in this yellow box, there's really not too many names that have call skews. The ones that still do are NVIDIA, SMH, related names, and then crypto. That's pretty much all that's up in this yellow box. Everything else, that call skews really come down. We're very neutral now. IV rank is across the bottom here. So we're kind of in this weird little sort of provoked IV, kind of calm, not much going on there, but call skews is really deflated back to your original point there. So we need NVIDIA and then Powell to give the all clear to kind of set stage 2. On that point quickly, because it's related, you and I were just talking about SMCI. My trade as we head into this week is SMCI's trading, and I'll show the vols in a second. It just got added to the S&P 500. I think that's really going to contract or constrict volatility. It's not like straitjacket, but if you look at SMCI here, just to give an example, if we look at the SMCI term structure, it's trading up, 3-4 months out in time. It's trading at a 90 implied vol. You had just mentioned NVIDIA. If you look at AMD, some of these other names, they're trading at 60 implied vol. And so, I was thinking an iron butterfly maybe to trade it. You looked at it for a few minutes and you came up with a June condor, which is, I think, a nice structure as well. So the bet here is that SMCI implied vol is going to go from around 100 down to that 60-ish range. And I think it happens over the next kind of month. And so you priced up a June, sell the 800, 700 put spread and sell the 1,500, 1,600 call spread. That's for about $40 based on the prices we were just looking at. So that's the trade that I think is interesting here. Again, just betting that because it's added the S&P 500, because I think chip sector vols in general may come down here after this NVIDIA event. That's the trade I like. Again, that volatility coming down. Any notes to add on that?
Yeah, I mean, the reason we're not just saying smash out a load of straddles or strangles is that it is still a crazy name that has gone up how many X in the last month or two, right? So
X is, yeah.
yeah. So, it's
500% this year. It's pretty good. Or 250%, excuse me, this year.
So you gotta keep yourself safe. Whilst I agree with the logic that the vol could come down because of the fact that it's coming into S&P, it is still a small market cap relative to those big names, right? So we don't really know what the fair value of this stock actually is. So you want to make sure you keep yourself in a position that if it goes wrong, you don't get blown apart and you still have a decent cut. The nice thing about the Iron Condor is that, yes, you'll collect 40 odd for it, which means theoretically you could lose 60 if you're wrong. But if we get a move of down to 800 or up to 1,500, which are your short strikes, I think it's safe to say you were wrong about the stock not being volatile or being less volatile, right? So then you can cut the trade and you'll be able to cut that trade at maybe a $20 loss as opposed to a $60 loss. So really the risk reward, if you are disciplined and you cut it early, if and when we hit the short strike, the risk reward flips back into your favor by about 2-1. And that makes it a really decent bet, basically.
Yeah, and I think, out in time adds the Vega. I don't even think I'd want to hold this thing. You can see there's earnings here in May, right? So I wouldn't have any intention of holding this thing until, June. But over the next couple of weeks, I think you'd really see that ball contract. So that's my strong idea out of here. On the S&P side, I'll just add quickly, we've been talking in our founders notes about 5,200 and 5,100. That's our risk on, risk off level. We look at the effects of vol and time decay and all the other positions, VIX expirations, all these things. We just boil it down to very simple. If we go over 5,200, particularly if we close there after FOMC, then it's risk on. We break 5,100 below there. That's the real risk off trigger. We've been stuck in this line. So that's the other thing we're watching for. Let the market show its hand, break one of those two levels, and then I think just ride directionally into the end of April. I want to pivot now to your really nice single stock strategy compass. You highlighted CAT here. Just take a quick look at the CAT chart just to get an idea of what's going on. People say that it's only a semi-stock rallying. There is the industrials, which is doing pretty good as well, as you can see with CAT here. Walk us through this trade and what the idea is.
Yeah, so this compass obviously is just trying to identify names that are looking overbought and oversold and seeing if the vol is high or low or mid-range. So when we have a name that looks a bit overbought, it's at the top of the range, it has been losing momentum, which means a momentum divergence, which tends to be a bit more bearish. So it could be a precursor to a reversal. So we're looking at CAT there. It's mid-range vol, which means something a bit more Vega neutral makes more sense from a vol perspective. So that's why we land on bearish risk reversals. So we think buying a 330 put to sell a 370 call, do it in April. The reason we think April is because that's just before the earnings. And obviously on earnings, these names can do 5% or whatever and blow through your strikes. So I don't really necessarily want to take the risk that CAT just keeps charging. But I think the odds of CAT breaking 370 in a material way before April, before earnings, is probably fairly low. And the stock's had an amazing run. Obviously, it's benefited from a resilient US economy, but we have even started to hear, Powell and company talking about cuts this year. So they obviously think the economy is going to cool down a bit, and that maybe filters through to CAT and CAT earnings at some point, right? So we just think the stock is stretched. Will the market start to price in a bit of a pullback before earnings? And if it does, you get a free option. Well, I say free option. Obviously, you are selling the calls, but you're not paying any premium to play a potential pullback.
It's a very interesting idea. I like it based on the metrics you outlined. I was checking our equity up here, and this shows call gamma, and you just see that call gamma really dwindles over this 370 strike, which, even if you don't want to buy into the ideas of dealer hedging flows and all those kinds of things, why aren't people buying lots of higher strike calls, which suggests from a sentiment perspective, it's getting a little long in the tooth, when you start getting up in that area that you highlighted as your call strike in terms of 370. So, stocks got some ways a little bit until then, but I just thought that 370 call strike was interesting based on positioning really starting to dwindle under that level. So that's a great trade. Obviously, again, VIX expiration, we'll just note that very quickly before we kind of wrap this up. I highlighted the last couple of VIX expirations. This was the January, and then February we had that unbelievable move where the VIX went to like 18 on the day before VIX expiration, and then VIX call sellers who had Wednesday calls just sold the crap out of them because they're like, great, these things were zero this morning and now they're all worth money. So, it's interesting because VIX expiration, those flows could pick up tomorrow, which is pre-FOMC. Be on the lookout for some possibly weird market moves tomorrow. Just don't be scratching your head saying, what's going on? If something a little bit funny happens tomorrow. Anything to note on that before we wrap this up?
Any spike is probably a sell. I mean, I don't expect a spike, but just in general, systematically leaning short VIX into spikes has been the winning trade.
Yes.
Probably continues to be the winning trade. Find ways to do it safely. Use VIX puts, VIX put calendars, whatever it may be. But I think if you do get a VIX level above 16, take it as a gift and do what you need to do.
Yeah, and on that last point, I would just say here, I was messing around with this trend channel and channel trend, whatever you want to call it. And you can see here what the equities have done in OPEX early week, right? We're at the bottom of this channel. We moved to February options expiration. We're at the bottom of the channel. We moved to March. From now at the bottom of the channel. So Powell could come across hawkish, and of course, this channel is going to break. Gun to head, you got to think, okay, we bounce into this area just because that's been what's happening. So why bet against that? But so far, the market's kind of adhering to this wave it's been. So if Powell just sort of comes off as nothing done, then to your point, that VIX is probably likely to trend lower, and then equities will catch a bid in that 5,300 area into April OPEX starts to make some sense. So
yeah, I mean, what I would like to see, I'd like to see weakness into the end of March so that you can then buy it for an April-May rally, basically. I think you've got quarter-end selling. You've got the buyback, the corporate buyback bid fading over the next few days as well. So you've got a few and the market does look overstretched, right? You look at some sentiment indicators and stuff. So if NVIDIA isn't a blowout to the upside, we could get some weakness into the end of March, but that weakness is probably a gift, and you want to position long into the summer. That would be my sort of big picture.
I would agree with you on that. A dip not being, or a consolidation is not like market top just because of the election dynamics and supportive accommodative fiscal and monetary policies and yada, yada, yada. I mean, why fight it? And on that point too, there's a lot of positions down here at 5,000. So, if we break 5,100, I think that level gets tested almost immediately, and it would be likely we'd see vol come for sale there because that's, there's been put sellers on every dip, right? So we'll see. So at any rate, big week here. Imran, thanks for your time today. How can people get a hold of you and hear what else you have to say?
So options_insight on X or options-insight.com is our website, and you can come and check out what we do. We offer a free trial so you can kick the tires.
Awesome. Thank you for that. I'm at Spot Gamma on Twitter, and then hop over to spotgamma.com and get a free 7-day trial of daily notes and all the tools you saw us kind of looking at here today. And so Imran will wrap it up here, and we will see you next Monday.
See you next week.